Hey traders, welcome to this week's episode of Traders Trade for the week of September 28th to October 2nd. I'm your host Dan Dow and this is episode 8. Let's recap last week. So we had a rough week last week. The markets fell below the 50-day moving average. If you recall last week, I said to watch out for the 50-day moving average because it's a good indicator of a bullish or bearish market. If we're above it, we're in a bullish market. If we're below it, we're in a bearish market. So we did fall below it, and it's being led by the financials and energy sector. The S&P 500 is now down 8% from its high at the beginning of the month, and the NASDAQ is down 9.5% from the high. And some of you might have got messages from your brokerage about margins being increased, and that's because of higher volatility as we approach the election day. So just be careful if you're using margins. Economic reports last week, the flash manufacturing PMI came in at 53.5. Durable goods missed. It was at 0.4%. Versus expected 1.1%. Okay, on to the market analysis. The S&P 500, so we broke below this trend line, tried to rally up to it, but fell below it. Now we're below the 50-day moving average. And as of Friday, we did close below it. And it looks like the 50-day moving average can possibly be heading down now, which is clearly a bearish market. What I'm expecting is that we're going to rally. Since we're in a downtrend, anything now is going to be a bear rally, possibly rally up to the 20-day moving average, and then bounce back down. For the Dow Jones Industrial, we broke below this trend line, tried to rally, and fell below the 50-day moving average. And again, the 50-day moving average looks like it's going to be heading down. We do have support at the 200-day moving average, but this downtrend line is at the moment intact. If it holds, then it can take it lower. Dow Jones Transportation fared better. Again, is being held up well by the logistics company like UPS and FedEx. We broke below the pre-COVID high, and we bounced off this support from back in August, and this wedge is still intact, so we'll see if it can rally to the top of it. If not, we have support at the 50-day moving average down here. So the NASDAQ started out the week bad, but was able to rally back up to the 50-day moving average, and the 50-day moving average for the NASDAQ is still sideways, so it hasn't gone into bearish territory yet. But again, because the market is in bear territory, this could be just a bear rally. There is a pennant formation that has formed, and we did break, as of Friday, we did break above the pennant and the downtrend line, but we'll see if the 20-day moving average is going to be acting as resistance. The Russell 2000 broke below this trend line and did break below the 200-day moving average and close right at it. The 50-day moving average is heading down now, and we do have this downtrend line that's going to be acting as resistance. So very bearish for the Russell 2000. In summary, the only light here in the market is in the Dow Jones Transportation, where it's neutral to bullish. Everything else is bearish, as you can see, with the DJI and Russell 2000 being very bearish. Okay, on to the sector analysis. Materials last week, we had it very bullish, but unfortunately it broke below this channel, and actually went below the 50-day moving average, but was able to close right at it. So the 50-day moving average is moving sideways, and we'll see if it's going to be able to rally back up to the 20-day moving average resistance, and if it's going to either break above it or head back down. We do have support from the pre-COVID high and the June high. Energy is just downright bearish, continues to head down, and again, this trend line is acting as a really strong resistance. The next support is going to be this low back in April, and then if that doesn't hold, then yikes, we're going to be testing the March low again. At this point, I wouldn't be shorting this sector because it can potentially rally back up to the resistance. I would wait until it rallied to resistance before starting a new short on it. Financials also did really bad last week, broke below this trend line. It was able to bounce off this support here from June, July, and also this support from way back in April and May. However, this downtrend line is intact, so we're right at the apex of it. It's going to have to decide what it wants to do, break above or below. For the industrials, which was another bullish sector last week, unfortunately, the market did take it down. It did break below the 50-day moving average, but was able to close out the week above it. And we're right at the June high, and we'll see if it can trade in this zone. If not, the resistance from the 20-day moving average can possibly take it lower. We do have support at the 50-day moving average and the 200-day moving average. Technology, so we broke below this trend line, and now we're in this bearish flag formation. Here's the pole, and here's the top of the flag and bottom of the flag, and we might be trading in it and heading down lower. We did rally on Friday, but we're going to be touching right at the resistance from the 20-day moving average and from this flag formation. Good news is that we did close above the 50-day moving average, and the 50-day moving average is moving sideways and not down. But again, if it is going to stay in this channel, then it's definitely going to be heading down. Consumer staples broke below the pre-COVID high, bounced off from this support, and unfortunately it did close below the 50-day moving average. So now we're going to see if it is able to rally to it, and then if it can break above it. If not, it's going to take it down. Consumer discretionary broke below this channel and did touch the 50 and was able to close above it. But we'll see. This downtrend line is intact, so we're going to see a rally to it, and then we're going to see if it's able to break above it or it's going to take it down. So real estate was in this channel last week and then broke below it, and it bounced off from the June low, but we're going to see that can potentially rally back up to this area of resistance and then maybe fall back down. It does have more resistance than support, so I would think the likelihood is that it's going to rally, but then fail to break above it. For utilities, we were in this smaller triangle last week. We broke below it. We're still in this symmetrical wedge or triangle. So we'll see if it can bounce back up to the top of it. Healthcare took a beating last week. actually broke below the pre-COVID high and touched the 200-day moving average, but was able to rally above it. But it's definitely in a downtrend. This trend line is going to be acting as a resistance along with the 50-day moving average and the 20-day moving average. So those are pretty strong resistance, including the pre-COVID high, and that 50-day moving average is heading down now. So bearish at the moment. Communications also bearish. So we broke below this trend line, tried to rally to the 20-day move average, but broke below it, and now we have a strong resistance trend line here. We were able to bounce above the pre-COVID high, but we're right at the apex of where the support and resistance are at. So for the communications, I wouldn't do anything. Too many congestions right here. I wouldn't know where it's gonna go from here. So I will wait to see what it decides to do. So in summary, not a good look for investors, but for traders, we should be able to go short if we're in a bearish environment, or go sideways if the market is neutral. Here it's telling us that the market is currently in a bear market. So, look for the bear rallies to short when we hit resistance. And here's something interesting. If you look back in 2016, the market did a similar thing. It had a high around September and started heading down, and it didn't make a low until 1 week before the election day, which was around, I believe, November 4th, 2016. So the market bottomed 1 week before the election day, and then check out this rally. So if you had sold out at the bottom, you would have missed out this major rally for almost 1 year. Can we see it again this year? Who knows, right? In 2016, we were above the 50-day moving average. This year, we are below it. But again, expect volatility until election day. And for all traders out there, if you don't know Thomas Bukowski, he has a lot of knowledge on patterns, and he has a site here that you should definitely check out. And it tracks a lot of patterns and gives you stats on it. Depending, for example, how often does it break to the upside or to the downside? And if it does break out, what is the target that you should be using? So it's a very useful site for traders. If you don't know it, then check it out. Give it a shot. If you see a pattern that you want to trade, look it up on this website and use it to help you select a target or a stop. Events for this week, not much in earnings. I would be interested in Micron on Tuesday, and then PepsiCo and Bed Bath & Beyond on Thursday. So for this week, we are definitely in a downtrend. Because we are in a downtrend, any rally can be seen as a bear rally, and you have to watch for it to rally to resistance area, because at that area, sellers might overcome the buyers and take it down lower, right? So watch out. Overall, the market and the sectors are neutral to bearish. And the market right now, it's factoring a lot of uncertainties and volatility due to the upcoming election. Plus, we have the starting of the flu season, combining it with the COVID-19. And then we have the Supreme Court appointment. For economic events, on Tuesday, we have the Fed speakers. On Thursday, we have the jobless claims. And then the ISM manufacturing PMI. And then on Friday, we have the payrolls report. Okay, so in conclusion for this week, expect uncertainties and volatility in the market. So during a time like this, you don't have to trade, right? If you want to just stay neutral or stay in cash, that's also a position, right? To protect yourself from the whipsaws. All right, traders, have a good week. Next week, I'll try to make an episode. I'm going to be out of town, but I'll try to put together an episode if I can while I'm on the road. All right. Have a good week. Be safe out there. Take care.